In this video, we are going to discuss about the Elliote theory patterns, which you already aware of, but you are not sure that is the Elliote theory because you not came across this type of concept earlier in every or in any videos which we recorded or which you have seen. Now, let's take an example here. The first price action is which is following the Elliote theory and which you already aware of is this price action. This price action, right? What is this price action? Let me draw it again. Suppose if market move upside like this one, what is our entry point? This neckline. This is the neckline. What is this price action? Okay, this price action called as head and shoulder price action, right? So as the head and shoulder itself is one kind of Elliote theory. See, I just marked this one when I was making the video as head and shoulder, but actually the price action it just look like this one if I mark from the bottom. First view, second view, third view, fourth view and fifth view. Because I need to mark first and second as per Elliote theory, and if you check the head and shoulder pattern, then also you will see same type of pattern like impulsive wave, impulsive, corrective wave in the 5 wave formation. Now after the 5th wave, market will start reversing and market will reverse like this one, and this corrective wave is no longer like market will change his trend. And what is the head and shoulder pattern pattern is telling? It is a pattern of bearishness in the market. Bearishness in the market, that means when your market is in uptrend or sideways or it's creating this type of pattern, then we can consider now trend is reversing towards the negative side. So head and shoulder pattern is following the Elliote theory. We can say that head and shoulder pattern is following the Elliote theory, and you already aware. Now it's easier for you to find out the Elliote wave in the live market, right? Because you already know what is meant by what is the head and shoulder and how to mark head and shoulder pattern. Now second is inverted head and shoulder. Inverted head and shoulder is look like this one also, this one only, right? And this is the neckline. Now based on this, you already know that what is the impulsive wave, corrective wave in the inverted head and shoulder, right? Inverted head and shoulder is also the sign of the trend reversal, but this is the sign of upside or uptrend. If you check the pattern in the live market, then also you will realize that it's nothing but the Elliote theory. Okay, so as I said in the last video that you already know what is meant by Elliote theory, but you are not aware that you are indirectly following the Elliote theory. Now this concept is clear for you, right? The third one is the rising wedge pattern or falling wedge pattern. First mark, second, third, fourth and fifth, and market will drop from here. Market will retest and market will drop like this one. Like this is the first wave, second wave, third wave, fourth wave and fifth wave. Now why it is Elliote theory? If I remove this trend line, this and this trend line, then what pattern look like? Pattern is directly look like this one also, this one only, right? And after the fifth wave, it will drop, it will retest and move downside. That's the trend reversal. Okay, this is also following the Elliote wave theory. Instead of saying Elliote wave theory, we can consider as wave theory or wave patterns. This is the repetitive pattern which you can see in any time frame at any time. This is the rising wedge. Now same for the falling wedge pattern, right? This is, if we cite this type of pattern, there is a high chances that after seeing 1, 2, third, or let's say first, second, third, fourth and fifth, market will start reversing from here. After the fifth, market will start reverse from here. This is the falling wedge pattern, and whenever you see this type of pattern, you already know where to enter and where to put stop loss, because we already covered all this topic in detail in the price action section. That's why I'm again and again telling you, if you miss the price action, then you are missing most important part of the trading, or let's say the heart of the trading is a price action in terms of, in my point of view, right? Now let's take another example from the Google Images. Here, if you see in the Google Images, you will see even if you see the simple trend line or the price action, you will realize that market will following Elliote theory, indirectly Elliote theory only. Let's take this example. If you see this example is nothing but the Elliote theory. If I mark this one, then first, second, third, fourth, fifth, and retest in market will move downside. Even if it's trend line, market is indirectly following the Elliote theory. The reason behind Elliote theory is so much important because Elliote theory is nothing but combination of price action, or let's suppose that price action is following the Elliote theory. This is the pretty much simple and straightforward example. No need to worry if you don't know or if you're not able to analyze, but if you know what are the price action, then you are easily able to grab what are the what is the Elliote theory and what is the when we can trade and when we can analyze the stock, how we can analyze the stock, and how to make entry or how to make exit. This type of pattern you can easily find out in the market. Okay, hope you got my point. The main takeaway from whole Elliote theory is, if you know the price action, indirectly saying if you know the price action, you know the Elliote theory. That's it, nothing more than that. Thank you so much. See you in the next video.